What's up, traders? In today's video, I will be performing a market forecast on NASDAQ using smart money concepts. So stay tuned. Now, as always, if you haven't already, I highly suggest that you go ahead and you watch our previous market forecast video on NASDAQ, which I uploaded on the 24th of July, so roughly 2 weeks ago. It'll just help give a little bit more context in terms of where we are right now in today's market analysis and where we were previously. If you head over to the channel, you'll also notice that I upload a market forecast video of NASDAQ roughly every 2 weeks or so. And the reason I do this is I want to give you guys more of a realistic point of view of how a trader such as myself follows the market over a prolonged period of time, and how I use the concepts that I show on this channel to find trading opportunities, starting from that higher time frame narrative down to that 4 hour and that 1 hour, right? And if you're new to the channel, definitely make sure that you look at our lessons playlist. In the lessons playlist, I currently have 8 videos uploaded there. I break down in a very simplified terms, very simplified explanations, the many different concepts found in smart money trading, right? Now, to kick things off, we're going to start off our analysis here on the weekly time frame, as I like to do, just to give ourselves more of a clearer picture of what price action is doing from a higher time frame point of view. And what we can clearly see is that price action has now successfully traded out of discounted pricing of this bearish weekly leg in here. Okay, we obviously know that this was facilitated by the mitigation of this weekly demand zone in here, and we have now quite clearly seen price action push up. Now, as I've touched on in the previous video, we've obviously been in a prolonged bearish corrective phase on NASDAQ and many markets in general. This particular correction started towards the end of 2021, around about December 2021. And we know that a lot of geopolitical events in Europe and in America have contributed to this massive correction, okay? But if we're looking at it from a purely technical point of view, we can quite clearly see that this bearish correction has given us a very clean, very well-defined bearish leg. And purely from a technical analysis point of view, what we can anticipate is we can anticipate price action now that it has traded into premium pricing. We can anticipate price action to potentially mitigate something in here before rolling over. Remember, we have 2 targets that we've marked out. We have this initial target down here, which sits just below our week low at 10676.2, and then at a more extreme level we have another sell target down here at 6623.3. Now, a lot of people are hinting at the fact that markets are starting to recover. We've also seen that crypto has started to recover, right? I don't want to get too excited by this bullishness that we've seen over the past couple of weeks, because as I said, we are still contained within this bearish weekly leg. The only time I would consider a potential bullish recovery on NASDAQ is after this particular strong high is taken, okay? Now, that's just from a much longer term outlook, okay? If we're looking at it from an intraday, inter-quarter perspective, right now, NASDAQ is bullish, and we would be wise to look for bullish opportunities, even though we are anticipating some mitigations in here that could potentially push price action downwards, okay? Now, if we drop down to the daily chart, and this is where we saw that interesting scenario playing out between the weekly and the daily, because if I so this is our weekly leg in here, as you can see, okay? And if I just draw your attention to this particular leg in here, you can see that as price action pushed down, we obviously had that initial reaction, price action pulled up, and then we had another push to the downside. Now, what this push to the downside did is, this push to the downside created a new bearish daily leg for me. So if we just quickly remove our weekly bearish leg. We know that it is contained in here. What we can see is that we had this nice bearish daily leg, and the last time we performed a market analysis video on NASDAQ, we were trading at around about here. All right, so we did see price action coming in and mitigating a very nice daily supply zone, which essentially sat at the extreme of this daily leg, because essentially what we had is we had something like this where we had our bearish break of structure and we were waiting for price action to pull in to that premium pricing before potentially rolling over. However, as we said in that previous video as well, because of the fact that this daily leg was completely contained within the discounted pricing of that weekly leg, we always knew that there was a possibility that this particular high could be taken, even though from a purely technical point of view, how we approach the markets using discounted and premium pricing, even though this particular high should have held, that higher time frame took preference. And what we actually saw is we ended up seeing a nice initial bearish reaction from this supply zone, and this bearish reaction lasted 3 days. So there was definitely a lot of selling opportunity within those 3 days. But after that initial bearish reaction, what you ended up seeing is you ended up seeing a lot of bullish momentum step into the market. We saw price action violate that daily swing high, and then what this now did is we now started to see that shift in trend from a bearish state to a bullish state. Okay, now understand how, and if I take you guys just back very quickly to the weekly chart, understand how this particular bullish break of structure to the upside here confirmed our weekly pullback. Okay, I'll say that again. This bullish break of structure in here confirmed that bullish pullback on our weekly time frame. Okay, but if I take you back to the daily chart now, what you'll notice is that we initially, so after we had the bearish break of structure here for that daily, we initially had a 4-hour change of character, which obviously confirmed this low for us. And this 4-hour change of character was the first sign that we were in now a potential weekly bullish pullback. Okay, that weekly bullish pullback was only really confirmed after this bullish break of structure. So a lot of bullishness stepped into the market, and as we play price action forward, you can see that we kind of just continued and trickled up towards the point that we have right now. And if we bring back our weekly bearish range in here, what you can see is we've got very clear targets that we can aim for while price action is in this bullish pullback. Okay, so from a daily point of view, we have quite obviously broken structure to the upside. Our next potential target would be this daily supply up here. Okay, and then beyond this daily target, we have another daily target up here, which sits at the extreme. Okay, which sits at the extreme of this weekly bearish range, and that daily target or that daily supply is also contained within a much larger weekly supply level. So the question is, how am I looking to trade this particular price action where we have now quite clearly seen a confirmed trend change from bearish to bullish? Well, it's quite simple. I'm going to be looking to trade longs until we get a mitigation of this particular daily supply. Now, the reason I want to trade long until this daily supply is purely because of the fact that if we look at it from a weekly range or from a weekly bearish range point of view, this particular daily supply sits well within premium pricing of that weekly range. We can see that we have a valid zone that's formed. We have the engulfing candle, we have the imbalance, we have the break of structure that resulted from that zone, and we also have some nice liquidity sitting above it. So this is a clear target that we can look for price action to trade into before potentially rolling over and continuing that underlying weekly trend. All right, remember, as I said, we are only really going to see a full-on bullish recovery on NASDAQ after this particular strong high is taken. Until then, I'm still anticipating bearishness to continue, right? But for that bearishness to continue, we first need to see a mitigation of something like this or something like this. So my outlook or my bias on the daily is also bullish, which is in line with that weekly bullish pullback. And all I'm going to be looking for is I'm going to be looking for opportunities for price action to pull back, mitigate something before continuing higher. If we very quickly end off the video by dropping down to that 4-hour chart, what we can see is we can see that bullish break of structure which violated the previous strong high of the daily bearish range. And if we look at it from a 4-hour swing point from a 4-hour point of view, our swing structure essentially looks like this, where we have price action pushing up, creating new highs and creating new lows. Okay, so we can see that in here we had a very nice mitigation and reaction from this particular 4-hour demand. Okay, now this low in here did its job and it broke structure to the upside. At the moment, we are waiting to see whether or not this is our confirmed high or whether price action is going to continue even higher. Now, this is where premium and discounted pricing will sometimes cause you to miss trades. Okay, in this particular scenario here, we quite clearly see that price action was playing this bullish leg. So if we mark this out, we can see that we had a valid break of structure to the upside. We had a confirmed swing high that formed in here, and we can see that price action pulled back to mitigate a demand zone that sat within discounted pricing of this 4-hour leg. Okay, after that mitigation, we obviously had a nice bullish reaction. Price action broke structure to the upside once again, and then what it essentially did is it created a new high. Now, the lower time frame will tell you whether or not this is a confirmed high if you look for that change of character. But notice how if we take this particular point as our new swing high, notice how price action hasn't pulled back into discounted pricing yet. We kind of had an initial reaction to the downside or initial bearish reaction after price action puts in this high, and then immediately a bit more bullish momentum stepped into the market. You can also see that we do have a little bit of a reaction here from a wick zone in here, but this particular wick zone, a lot of people would not regard this as a zone that sits within discounted pricing, right? A lot of people would probably be looking for something, say, in here. So from a 4-hour point of view, if you identify this as your new high and this as your new bullish 4-hour leg, what essentially you'd be looking for is you would have been waiting for, if I just quickly bring on the bar replay tool, essentially what you would have been waiting for is you would have been waiting for price action to pull back towards something like this before potentially going higher. You would have missed out on getting involved in this particular demand zone here. And what price action would have done is price action would have continued on without you. Now, this does not mean, okay, this does not mean that this particular 4-hour range has now essentially played out, because there is every chance at market open that price action just slightly trades above this high before completely rolling over to mitigate something in here before continuing higher, right? That is a possibility. But based on the amount of momentum, the amount of bullish volume that has entered the market here, you won't always get a textbook pullback into discounted pricing before getting involved in longs, all right, before being able to get involved in longs. And that is one of the disadvantages of trading premium and discount. All right, notice though how the leg just before this one, premium and discounted pricing, played out perfectly, where we have the 4-hour leg established, we have a pullback into our discounted pricing, mitigation of a demand zone before price action pushes off. Okay, one of the key things that I also actually want to point out to you is that the previous bullish leg actually did a similar thing, where we had price action push up. A lot of people would have potentially seen this. Okay, so if we bring on that bar replay tool again, a lot of people would have seen this as the new high, so they would have marked it out as something like this. Okay, and once they mark out that particular high, they would have been waiting for price action to pull back into discounted pricing before pushing higher. Now obviously at this particular point, again, notice how this 4-hour demand zone sits at the equilibrium of this 4-hour range, which is very similar, okay, which is very similar to this particular 4-hour. Okay, and what does price action end up doing? We see that price action mitigates our 4-hour. We get a nice bullish reaction off of that 4-hour demand zone. Okay, and then what does price action do? It goes ahead and it trades ever so slightly above this high before completely rolling over once again to mitigate the demand zone that sits a little bit lower. Okay, and then what you could now do is you could now trail your high to here. You could move your overall 4-hour bullish leg to something like this. And then once price action now trades into this 4-hour demand zone down here, you can then look for longs from here. Let's say you cover this high. You can then look for longs to take out this particular high in there. Okay, so the reason I wanted to point this out to you is because you won't always see a textbook premium and demand setup play out. A lot of times price action will induce people into the market. They will induce buyers into the market before rolling over. It will induce sellers into the market before pushing higher. It isn't something that plays out 100% of the time. But then again, nothing in the markets play out 100% of the time. You need to remember that we are playing a probabilistic game, and it's all about making sure that you stack the odds in your favor over the period of 100 trades or 200 trades or whatever the case may be. All right, so these are the kind of nuances that you want to backtest. These are the kind of nuances that you pick up in terms of the characteristics of the market that you're trading, and then you just adapt accordingly. All right, me personally, I love using premium and discounted pricing as a way of trading my smart money concepts, because it just helps you eliminate some of the noise that you see in the market. Right, so to end off here very quickly, on NASDAQ, what we're looking for is we're looking for continued bullishness until we see a mitigation of this daily supply zone. Depending on what price action does at this zone, we could see a bearish continuation of that overall weekly trend. Okay, if this particular daily zone fails, we could see just a small reaction like we saw in here. We could see a small reaction before price action pushes deeper to mitigate this supply zone, which sits at the extreme of the weekly. And if this particular supply fails to push price down a lot lower, then we can comfortably say that this strong high being taken is a good sign that NASDAQ is potentially about to recover. All right, so I hope you guys enjoyed this video. If you did, please make sure that you like it, subscribe to the channel so you don't miss out on any future content. I appreciate you guys so much for watching, and I'll see you in the next one.